Micron just told the market it expects to earn about $31 a share this quarter. Wall Street thinks that's only the start. They have it earning double that next year. And the stock trades at about 6 times that bigger number, which is the market's way of saying it doesn't believe a word of it. So Micron went out and signed $100 billion of contracts designed to make sure it happens anyway. One of those two things is wrong, and by the end of this, you'll know which one I think it is, and exactly what would change my mind. Micron makes memory. 2 kinds. DRAM is the fast stuff your computer thinks in. NAND is the slower stuff it remembers with. 3/4 of the money is DRAM. And here's what makes it different from almost anything else you own. Memory is a commodity. It's sold by the bit, like wheat is sold by the bushel. Micron doesn't really set the price. The market does. So Micron's profits don't move with how much it sells. They move with what it can charge. Right now, a lot. DRAM prices went up in the low 60s% in a single quarter. NAND went up in the mid-80s. Micron told us what this quarter looks like back in June and doesn't report again for about a month. That gap between what the company promised and what the market will pay for it is the whole video. Before we touch the price, let's ask what kind of business is producing these numbers. Fair warning, the scorecard is going to annoy some of you. A D, on the best year in company history. Because the quarter itself is genuinely one of the strangest things I've read this year. Revenue, $41.5 billion, up 346%. And out of every $100 of that, roughly 85 was left after paying to make the thing. I ran that twice. Micron's best year before this cycle was 59%. A factory business pouring tens of billions a year into buildings, posting a software company's margin. After everything, including tax, it kept 68 cents of every dollar. So why the D? A grade looks at the whole record, and that's where this gets uncomfortable for you as a buyer. This is return on invested capital, what the company earns on every dollar it puts to work. Over 10 years, about 10.5%. Over the last 3, 1%. Revenue growth over a decade, under 9% a year. And no durable moat. Nothing structural stopping a competitor from doing the same thing. And over 13 years, the share count went up about 8%. You're not quietly getting a bigger slice. The pie's cut into more pieces. Most coverage of this stock goes wrong at exactly 1 point. 3 numbers, same company, same day, same price. 21 times, 13 times, and 6.25 times. All correct, just dividing by different earnings. 21 is last year's, 13 is this year's, 6 is next year's. So if someone quotes you a price to earnings here without saying which, they've told you nothing. And this next bit is the one to keep, because it's true of every cyclical you'll ever look at. In a business like this, a single-digit price to earnings is not a bargain sign. It's a warning label. It's the market telling you these earnings are the peak. Micron's price to earnings was 4.3 in 2018 and around 7 in 2022. Both looked cheap. Both were tops. After the first one, profits fell 81% in 2 years. After the second, the company lost $5.8 billion the very next year. Gross margin went from 45% to -9. Look what that did to the top line. Last year, Micron sold $37 billion of memory. This year, about 129. Roughly a decade of growth in 12 months. Okay, what's it worth? I'm doing this backwards because the forwards version doesn't survive contact with this company. Run the scenarios and fair value lands anywhere from $508 at the low end to about 1,595 in the base case, to 2,374 at the top. Weight those a quarter, a half, a quarter. My judgment, not the odds of you making money. And you get 1518. The stock's at 967. So it sits inside the range and below the middle of it. Which sounds like good news, until you notice the range spans nearly 5 times end to end. That's too wide to act on, and I won't pretend otherwise. So flip it. Instead of guessing what Micron earns, ask what the price already requires. To make you 12% a year for a decade, Micron has to hit a certain profit by 2036. And that depends on what people pay for those earnings then. If the market pays 10 times earnings, normal here, Micron needs about $300 a share. At 15 times, about $200. And at 32 times, a growth stock multiple it has frankly never sustained, it still needs 94. For reference, the best year in Micron's history is the one happening right now, and it's tracking about $73. And that's still an estimate, not a reported number. Now the part that decides everything. The one slide I'd screenshot. Those profits have to come out of revenue, so let's get that honest. Fit a line through 17 years of Micron's actual revenue and extend it, and 2036 lands near $108 billion. Wall Street's 2030 estimate is $449 billion. 4 times bigger. So the same price you'd pay today requires wildly different things from the company, depending on which of those two numbers you believe. On Micron's own trend line, even at that generous 32 times, it would need to keep 98 cents of every dollar. Not a stretch target, arithmetically impossible. No Costco of goods, no tax. On Wall Street's revenue, that same rung needs about 24%, against a 13-year median of 18.5. That's achievable. Not comfortable, but achievable. But notice I just use the most generous multiple on the board to get there. Walk it back to something normal, and it stops being comfortable fast. On Wall Street's own revenue, at 15 times, Micron needs to keep 50 cents of every dollar. At 10 times, the multiple I called normal for this industry, it needs 75. Both of those are 2 to 4 times anything it has averaged. And there it is. If you buy this today, you're not betting on margins or the cycle or AI, you're betting on whose revenue number is right. One more thing before you decide. That $449 billion comes from 15 analysts, and the earnings side thins out faster than the revenue side. By 2029, only 6 analysts are still publishing a profit number, and the margins their estimates imply run anywhere from 31% to 77%. And for next year, taking the most optimistic profit estimate against the average revenue estimate implies a 98% margin, which can't happen. Not because anyone's careless. The revenue list and the earnings list come from different people, so those numbers were never meant to be divided into each other at all. That's what the bull case rests on, less a forecast than an average of forecasts that disagree. One last marker. Value Micron on its own long-run revenue and its own median margin, no cycle, no AI, just the record, and you get about $88. I don't think that's the right answer either. It ignores that HBM might genuinely be a different business. But it's the floor of the argument, and it's a long way down. Now the other side, properly, because there is a real argument here, and it's better than it's cheap. Micron signed 16 long-term agreements with its biggest customers, 14 of them adding to about $100 billion of business over roughly 5 years. And they're take or pay, meaning the customer pays whether they take the chips or not. It's a gym membership they can't cancel. Careful with that $100 billion. It's contracted future business, a signed order book, not cash, not revenue. and go looking for it in the filing. It isn't there. What Micron filed is about 5 billion. The 100 came from the earnings call. Both are the company talking, and I'm not calling it spin. But one went through a filing review and the other didn't. And the filing itself warns the number is not expected to be indicative of future revenue. When a company tells you not to overread its own best headline, listen. The customers are also putting money down. About 22 billion committed, roughly 18 of it cash. But it doesn't show up as profit or as money the business made. It sits with borrowed money on the cash flow statement. It's a caterer taking deposits on weddings booked through 2030. The cash will be in the bank. It still isn't yours. You hand it back. And it hasn't landed yet. Last report, it was 422 million, not 22 billion. That arrives in the quarter we're about to see. The balance sheet is genuinely strong, and I'll give them that fully. 30 billion in cash and investments against under 6 billion of debt. So what breaks it? First, the fair version. Management says those contracted floor prices support a gross margin well above our peak quarterly margins in any past cycle, and the best full year of the last cycle was 45%. That's a real floor, and it's the strongest thing the bulls have. But the same contracts have a ceiling. The biggest ones cap the price at what memory Costco last spring. Micron bought that floor, and paid for it with its own upside. Meanwhile, prices are forecast up another 13 to 18% right now. Though I have to give you the other half of that number, because it cuts against the ceiling argument I just made. The same forecaster has next quarter at 3 to 8%. The rise is already slowing. And Micron's own guide, in its own words, reflects a meaningful moderation in the rate of price increases. The company is telling you the best of this is behind it, and its main rival reportedly took the cap off. Same boom, no ceiling. The protection is also smaller than it sounds. Those deals cover about a fifth of DRAM volume. The other 4/5 is fully exposed. And look at who signed them. 4 very large customers, 3 medium ones, and the rest automotive. That cuts both ways. Big customers signing 5-year commitments is a vote of confidence you don't get from a spot market. But it's not a broad safety net either. If one of those 4 rethinks what it needs in 2029, a big piece of that 100 billion argues with itself. There's a legal one I think is underrated. On the 12th of August, Netlist filed a complaint with the U.S. Trade Commission over 4 patents covering server memory modules. And it isn't asking for money, it wants exclusion orders, which target the ability to import the product. Different kind of risk entirely. The cycle argument is about how much Micron earns. This one is about whether it can ship. Then there's the thing that ends every one of these cycles. Micron is spending 27 billion on new capacity this year, more next year. Everyone else is too. Micron says supply gets better gradually in 2028. The boom is funding the thing that ends the boom, and the company has already told you roughly when. So is price agreeing with any of this? A lot of you trade this stock, and the chart is the strongest argument against everything I just said. Price is above both its 50 and 200-day averages, faster above slower. That's an uptrend, no argument. But trend quality is weak. ADX, which measures how strong a trend is, not which way it points, is at 12. Choppy. It's walking uphill, but wandering. Momentum next. MACD, which tracks whether price momentum is improving or fading rather than which way price is going, is above its signal line. And it's improving. That's a genuine positive. RSI, where price sits inside its normal range, is 54. Neutral. Not overbought, not oversold. Which for a stock up this much is not what I expected. Stochastic, a similar idea, 61. Also neutral. Money flow index combines price with volume, 66, above the midline. Buyers are participating. And then Chaikin money flow is negative, minus 0.08. That measures whether volume arrives near the highs or leaves near the lows. It says money is quietly walking out, which disagrees with everything above it, and I'd rather show the disagreement than tidy it away. Volatility, measured by ATR, average true range, which estimates a normal day. For Micron, that's about $67, almost 7%. Position size accordingly. And point and figure, which I use for one thing, where the floor and the ceiling are. Bull confirmed. Rising column at 1,000. Support underneath at 850. Resistance overhead at 1,200. And notice that's basically the 52-week high, which is 1,255. So, 3 readings. Health. A 10% return business, no moat, having the year of its life. Value. Price between my bullish case and the one where the boom simply never ends. Chart. An uptrend the money flow isn't fully backing. Which comes down to one question, and I want to hand it to you cleanly. Is roughly $155 a share a peak or a plateau? If it's a plateau, the contracts hold, AI demand keeps memory tight, and the floors do their job. Today's price is defensible, and you're paying for a boom that doesn't end. If it's a peak, you're buying a commodity manufacturer at 13 times its best year ever. And you're doing it before the supply everyone is building starts arriving. And I could be wrong, so let me say it plainly rather than bury it. The thing that swings this hardest isn't the margin. It's which revenue line you believe. Micron's own 17-year trend, or Wall Street's 2030 number that's 4 times bigger. I don't know which one is right. If AI has permanently changed how much memory the world buys, the trend line is the wrong guide, and I'm being far too harsh. There's also something nobody can check. Micron says those $18 billion in deposits get returned to customers later in the contracts, but no filing says under what conditions or what happens if a customer walks. Cushion or bill, and it isn't disclosed. So what would move me? Micron reports in about a month. I'm not watching the headline number. I'm watching whether that $22 billion in deposits actually lands on the balance sheet the way management said, and what they say about pricing into next year. And on the chart, 1,200 and 850. Those are the 2 levels that end the argument. My read, an ordinary business having an extraordinary year, priced as though the year is permanent. In this industry, the point in the cycle matters more than the company. And that's not a good enough edge to carry one company instead of an index. Watch list, with 1 report and 2 levels on it. Not a decision I'd make today. Everything here is educational. My read of public filings, not advice, and not a recommendation to buy or sell anything. I'm showing the work so you can disagree with it properly. Sources are on screen throughout. If you think I'm too harsh on that margin assumption, tell me. That's the input that decides it, and I'd rather be argued with than agreed with. Drop the ticker you want pulled apart next. Subscribe if you want the rest of the